All right, Matt, who do we have on today for our next episode of Builders, Budgets, and Beers?
All right, so we had Dory on. Dory runs the outsourced accounting group at YHB, which is a top 100 CPA firm. She's a construction expert. She's been working on construction accounting for 28 years. So it was a great discussion. Went through essentially what are the main issues contractors are typically coming to her with, or the main issues she sees early on when she's working with them. So yeah, we dove into those topics. I thought she did a great job explaining them. And yeah, it was a good discussion. So let's get into it.
It's worth the listen. Jump in.
All right, Dory, how you doing?
I'm doing well. Thank you for having me.
Yeah,
Dory,
thanks for being on.
Go ahead, Matt. Go ahead.
What are you going to? Well, I was going to say, Dory, give us a little background for the audience. Where you dialing in from? Where are you coming from? What's the firm you work at? We got an expert on here. Dory's going to drop some knowledge on you here.
So I am coming from Fredericksburg, Virginia, just south of our nation's capital and just north of Richmond, Virginia. I work with YHB. I'm the practice lead for our client accounting and advisory services team here at YHB. I have been in construction now for more years than I like to say. There used to be a time where you want that number to tick up, and it's now kind of, I'm on the downward slope. So,
but I've been doing this. What's the number? How many years?
28 years, pretty much.
I told you we have an expert on here.
An expert.
28 years, construction accounting. And YHB, you guys are a big accounting firm, right? For those that aren't.
Yes, we're a top 100 accounting firm. We're a top 50 construction accounting firm, and we are a regional firm in the Washington metropolitan area. So it's our market.
Fantastic.
Yes.
Do you focus on construction companies in that region, or do you work kind of virtually with customers across the country as well?
So we'll go anywhere with this, and we're involved with a lot of national associations as well. And so we've had a lot of success with kind of partnering with like CPA and member firms that are in there as well to kind of, CAS is something in the last couple of years that's really kind of come into the forefront as the nature of our business has changed. So we're looking to get into more of, internal accounting for some of our clients as well, and finding out the best way to do that. And I've had a ton of success with doing this with construction contractors, specifically, because of, I think, their lack of wanting to maybe invest in a full-time controller or CFO. And so they do have internal accounting staff that can do the transactional work, but it gives us the ability to kind of come in on a part-time basis to advise them at a much higher level to help them as their businesses expand or as they're looking to transition to maybe next generation and so forth as well. So.
Yeah. Okay, great. Yeah, no, I think this is an interesting time. If I'm a construction business owner looking for help, to see a lot of the top accounting firms now starting to build out, you had said CAS, right? Like the client accounting services, to build out that outsourced accounting division. So if you're a construction business owner listening, like Dory works with, tons of construction companies like you, and they offer, as she mentioned, CFO services, et cetera. So, cool. So Dory, today we're going to talk a little bit about when you on the point of working in this kind of outsourced accounting capacity with construction companies, you see a lot of them, I would say maybe like inquiring about your services up front. Like, how are you start to get a sense of whether and where a construction company is at in terms of their sophistication in the back office and how much they're thinking about the back office?
So a lot of times, it comes from assurance practices where they're doing year-end reviews or audits for them, and they look to find help for their clients because there's a lot of adjustments and so forth, or someone's had a huge surprise with that one job that's gone bad, and they're like, how could we have seen this sooner, made changes sooner, or they're in a very entry-level accounting system and they're looking to improve and kind of get more real-time reporting. And, we talk to clients a lot of times about how it's not a once-a-year kind of reconciliation thing. It's something that accounting should be helping support the production teams year-round in providing that information timely, so real-time information can be available and be disseminated into the field.
Totally. Just a question that I had on that, Dory, and we discussed this with another accounting partner. I'm curious your take on it though. When you mention that, I'm sorry, we're getting a little feedback. When you mention that, like, you're talking to builders that are wanting to have more real-time reporting, more, upgraded, more advanced accounting practices and software in their business, what does that actually look like or sound like? Is it from a size of builder? Is it they ran into an issue that they're trying to prevent or mitigate? Like, what are some of those flags and triggers that you hear builders coming across before they are really motivated to have that conversation with you?
I think the biggest thing is when you work with firms that are very knowledgeable about the job schedule or the work in process schedule, it just becomes this thing that's constantly hanging over a lot of companies' heads, and it's usually addressed at year end. And, it's kind of like if we're updating our estimates, if we're speaking the same language as, the accounting department or the accounting function as that, the field is usually using to manage jobs. And so I think it just becomes a point where it's like we've got to get better at doing that. We need to and there's so many reasons. When I talk to subcontractors, if you think about like roofers sometimes say, I price it per square. And it's like, well, how much does it cost you per square? Are you using a cookie cutter that's going to put you out of business because you're not making money, but it's just how you've always done it? Are you analyzing the true costs that are going into it, or are you repeating the same mistakes? There's as businesses grow and their indirect allocated overhead kind of grows as well, it's like, are we including this, or are our profits really eroding at the end of the day when we take into account the cost of our equipment, the cost of fuel, and the likes on our jobs? And I think it's just taking a step back and looking at the true profitability of a job from the numbers perspective, not just the materials on the site, we're getting it done, and the production aspect of it.
So how often do contractors come to you and say, I don't really know if I have a problem, but like maybe you could help me figure it out, versus like, I know that I don't know the cost of the square foot estimating, and I need to help figure out a better estimating process? How often are people just calling you and inquiring and saying, I don't really know what I don't know, but see if you can help me out, versus a specific problem?
I think a lot of times it delves into like increased cost, and they have like a bad year or things are taking a turn. And it really does kind of tie into some of the indirect, right? Like, I know the material cost. I know kind of like my man hours. I know if I have a subcontract, these are like given numbers, but it's all of the other things that as companies grow and those cost increase, all of a sudden those become I wouldn't say unmanageable, but they're this unknown area that it's impacting my business, so to speak. And so typically we've moved to a next level, we're growing, and we need to kind of have better information. And it's interesting, I read a statistic that most companies fail in growth mode, right? Because they get ahead of themselves in so many ways. And one of them is they don't have cost controls. They're not managing budgets truly on these jobs.
Yeah. Okay.
I do want to like loop something in here, Dory, because I'm curious. You'd mentioned that CAS is like really picked up. Did you mention like as of recently?
I would say probably in the last 5 years as an industry. Yeah.
I was literally going to say 5 years. And I say that because I was working at a company called Builder Trend before coming over to Adaptive. And I built their consulting program over there. And there was a lot of builders buying standard operating procedure based consulting services to start standardizing processes with the intention of like more efficiency. Where I'm going with all of this is I wonder if that last 5 years and that correlation was the outcome of what happened during COVID, the shortage in inventory being exposed like it was and it has been since the crash in 2008. But then also interest rates being so low to where there was so much getting flooded into these construction companies building and doubling and tripling their top line revenue because they could go out and win the work because everyone was building at cheap interest rates. And then they get out over their skis to where you would hear it over and over and over of like, I used to be a $2 million a year builder. Now I'm a $10 million a year builder, but I'm making less than I was when I was doing 2. Is that exactly what you're explaining? Because that was like the application, the real world that I was hearing.
Well, and there's so many things, like during COVID, like there was, a large portion of the population that just decided not to come back either, right? So you have people that maybe had been with an organization for a long time and they just decided, for whatever reason, and a lot of times those are office staff that had turnover, that we had to kind of address as well. And then absolutely material shortages and the ability like to have being locked into something and not really understanding I'm going to have to pay more for something because it's not available and I don't have an escalation clause. All of these things kind of, came to a head. The interesting thing about building as well is I think during the pandemic, nobody stopped. Like, half my clients were like, mask, stay at home. What are you talking about? We're working, we're outside. And what happened is they had backlog during the pandemic. They were working during the pandemic. And it was interesting because when we look at all of the things that impacted construction workers, the biggest thing that was kind of like the unknown is they weren't gaining new backlog. So the pandemic really impacted them 2 years down the line where they weren't getting new work for the future. And now all of a sudden I have an infrastructure that I've built based upon something. And, it's interesting. There's things it's like you can't cut deep enough soon enough. Right. And so now all of a sudden I have to scale back. Maybe some of the equipment needs to be sold. Maybe I need to reduce my labor force where and a lot of times builders hang on to those because sometimes when we need them, we can't find them. And when we have them, we're reluctant to let go of them, but we can't sink the ship trying to keep everybody on it. Right. And so it's those types of things that I think were really indicative of results from the pandemic.
Yeah, totally. I think it's super interesting. Go ahead, Matt.
Well, no. I mean, I think that there's a lot of macro, that potentially is causing shifting pricing models and issues in construction. But I think CAS generally as from an accounting industry, that's just kind of become a new growth area, right? For accounting firms generally,
yes,
like maybe disconnected from like macro trends in construction. Just generally, like large accounting firms are now starting to become more interested in doing things like bookkeeping. Right. And in doing things like CFOs.
They've always had like the bookkeepers. And a lot of times like the bookkeepers have gained their experience by working in an organization for a very long time. What they don't have is the in-depth knowledge per se, like the technical training. And unfortunately, there's been a significant decline in people entering the accounting in industry in general, like getting accounting degrees, moving into even like a CPA role just because of our requirements in order to get the certificate. But I also think that indicative, maybe even from the pandemic and so forth, are the baby boomers that are retiring and it's just not being replaced at the same level. So we find this huge gap in experience that truly can benefit organizations. And also when you think, well, I have somebody that can collect the money and pay the bills. What more do I need? Because that's where I kind of want to keep my overhead cost, right? Like seems to be working. And the other thing is owners typically, I have this conversation all the time, say, I have everything about every job in my head. And that's great until one large contractor or subcontractor invoice is forgotten in the manual calculation, or you look to sell your business. I always say, when you sell a car, here's a one-liner for you, Reese. When you sell a car, they don't want you in the back seat, right? Telling you, right? It's like they want the car. They don't necessarily want you in the long term. We have to figure out how to get that knowledge that you have out and into something, whether it's an accounting system or tools that can help you run the business without you being in the car, right?
Yeah.
And so
that's great.
So Dory, this is great. So the two things you just said, that's perfect. So earlier when I was asking about how often they come to you and say, like, I don't really know what I don't know, or I don't know if I have a problem. More so you're saying like often people just think they don't have a problem, right? So like this example of, well, I have someone to, collect the money and pay the bills. Like, what do I need more accounting expertise for? Like, what do you say in response?
And so typically what's happening is we're reviewing like their jobs and they're like, I just don't understand why this is under budget. Like why we didn't make money on this job, why we lost money on this job, why our gross profit margins are slipping. Like a lot of times when you go through reviews of financial statements or audits, people are asking about your gross profit percentages, about like why this contract faded, or why you're slipping. And typically there's either a problem with the estimating that we continue to do, but we're never comparing those estimates to actual cost. There's indirect costs that are being applied to the jobs that weren't included in the original estimate. And so when we slice it and dice it a different way, the owner's like, well, I have cash in the bank, I'm paying my bills on time, but there's so many things I think sometimes that we lose sight of, right? Like a lot of times when I talk to contractors, they understand where their cash is, who owes them money, and what they owe. Those are the three things that they kind of focus on. And I'm like, yeah, but things got a little tight and you pulled down your line of credit. Like, how are we considering like paying that? And then the part of all of this is you've already paid people in payroll. Like, where are you at in the process of have you billed somebody for that? Or are you financing this project for your customers? Like, are we looking at this a little bit differently to understand what is the cost of how you're doing business from a cash perspective? Just because you have cash in the bank doesn't mean you don't need to have more cash in the bank, or that you need to reduce debt associated with maybe a line of credit. And those are the things I think that are missed by not valuing maybe like the accounting function.
Yeah. Okay. So there was a lot that you said in there. So we should, how would you give your clients like a roadmap? Hey, today you're a construction company. It's great that you have cash in the bank, and it's great that, maybe like over the next 30 days, how much you're owed and owe. But I think what you're saying is, hey, we both need a more like long-term view on the business, right? Around like the sophistication of how I'm managing my cash and like forecasting out further, as well as to support that more detail on an individual project by project basis, right? And so like where would you get started if you have a contractor that's like of this mindset and is like doing great, like doing well, but could be doing much better? Where do you start?
So it's interesting because one of the things that I really think works well with contractors is kind of boiling it down to key performance indicators, a handful of them, and kind of like visually showing year over year how things change. But those KPIs are also geared towards here's your bonding capacity based upon X, Y, and Z, right? So we usually start with working capital. Here's your current assets, here's your current liabilities, and those liabilities include more than just accounts payable. And so kind of visually showing what's in that bucket that you have to pay as well. But then also looking at turnover. I have a lot of contractors that pride themselves in being, I constantly pay my vendors. I'm always up to date. I go, I know, but your customers don't pay you for 45 to 90 days. And now you've created this crunch where you're Johnny on the spot with paying people. Plus, outside of accounts payable, there's payroll that you pay weekly or biweekly. And so your cash flow really is ahead of itself as to what's going out the door. And I really think, again, when backlog dips and you don't have this constant flow of work, that's where you kind of really start feeling the pinch of, kind of not managing your cash a little bit better. So we look at just the basics and also kind of dialing into these financial statements typically are provided to either lenders or bonding agents or surety companies, right? What are they looking at? Like when they look at this, what's the picture that they're presenting? And so it's kind of like I talked to a client once about kind of like if you send something out and we haven't really kind of looked at it and discuss it, it's really hard for people to unsee or take something out of a file that you've provided for them. So if we can get in there ahead of that to kind of say, here's what this says, right? Let's talk about what this picture looks like before you try to send it to somebody, because they can't unsee that picture once it's out there. So,
yeah. Okay, cool. So we got these like KPIs, which then, you kind of named a few, and then there's some that the external parties, the banks, lenders, bonding agents will want to see as well. So a contractor comes to you, says, hey, I got enough cash. I know who I need to pay. I know, how much I'm owed myself. You start with like, well, let's just take a look at your books and I can kind of get an assessment of areas there are for improvement. And the KPIs, the key KPIs you're looking at, just how they're managing their working capital, and then turnover. What any other key KPIs you start with?
Like debt to equity, like, from a bonding or from a banking perspective, right? Like how much skin do you have in the bank versus how much the bank has? The other thing that I think is important is a lot of times when cash gets tight or companies start to, have financial difficulties, it's like, what are the ratios that the bank is going to look at year end? Let's find out where those are now. What are your covenants and your ratios that are required for your loan agreements? And let's get ahead of that, because, if we have to ask for waivers at year end or something, or we have to focus on how we spend our cash better to improve some of these things, you don't want that to be at the 11th hour when we're getting up to, a line of credit renewal or a large note that you have outstanding and we're not meeting the covenants. So
yeah. Okay. So of all of these that we've mentioned, including also you had mentioned just estimating is typically a problem, which one do you think is the most common problem that you come across?
Actually, it's probably none of those. It's probably like the job schedule, right? Because I think the biggest thing is gross profit margin. And it's like we do a lot of fade analysis for our jobs. And so it's kind of like, here's what you thought when you originally signed up this contract with the customer, and here's like the estimate that you put into it. And we compare it to how it turned out. And sometimes there's a gain where you had, better change orders that you were able to increase your gross profit, or you had efficiencies on things because, you didn't have to dispose of as much yardage of dirt as you thought that you would, But the other side of that is it cost us more because we had to put more labor hours into this job than we were anticipating. It was poorly managed. And the thing is, to get ahead of that is really what helps a company in its success, because if they can say, how bad is this bleeding and can I stop it before it becomes, something there's past the point of no return, then maybe we can be proactive rather than going, I thought that job wasn't going well. Come to find out, look at that, it wasn't, right?
Yes.
And so, yeah.
So this job, so basically the gross profit by job is usually the biggest issue, is just expectations versus reality, basically, and then that process repeats itself. Mm-hmm. This is like, I think, a perfect time for your other one-liner. What's the thing you always say about accounting?
I can't make you money, but I can keep you from losing money.
Yeah. And so you come in there, you see the gross profit. They know it's not up to their expectations. How do you help them on a go-forward basis from not losing money? Yes.
So, there's so many different ways, right? Like when you look at like the estimates, for example, it's kind of like, is it being properly managed? What's going on? Understand your reduction in the gross profit percentage, because there might be other things that need to be adjusted associated with that. The other thing is sometimes it's just a pure case of volumes lower. And so we need to make adjustments because we're not, this level of company anymore. We're, we've backed down $4 million. Well, that is a big change, in the scheme of things. But I think the other thing is we talk a lot with clients about indirect allocated overhead. What is that number? Do you know how much you have to burden a contract for these little things that aren't easily added to the estimate at the end of the day? And one of the things I say is, let's evaluate that in September, because October, November, and December, you're bidding for the next year. So we make that adjustment in January every year for clients to say, what should your indirect allocated overhead rate be, so that, in the next year, we're taking a different approach. But the estimates that we've done with that new rate, we've addressed that 3 months ahead of making that change. So a lot of it's just being proactive and understanding. But, we also look at the job schedule and we bridge the field and the office. And so we go in a lot of times and talk to clients about what are the processes that your accounting department should have? When do they have to have things done? When should things be in the system, be reported to the field, and so forth? And we set up calendars and deadlines for certain things. And after we've kind of worked through that timeline, The next thing we do is we have a meeting with the people in the field that are impacted by this, and we share it with them. A perfect example are timesheets. Guys, we need the timesheets on Monday because we have to do payroll by this time to get your guys paid by Friday. I remember I went to a contractor once and I couldn't get the timesheets. And I'm like, I have a simple solution. If there's no timesheets, I'm just not going to pay people. And the owner was like, you can't do that. They won't come to work. And I go, well, and there's always this healthy friction. I'm like, that's fine. So then get me their timesheets and they'll get paid on Friday. So we have to kind of learn to work together to understand the importance of why accounting is, we're just not, asking for something just to be difficult on Mondays. Totally. We have to be able to have that information to make sure that they're paid on Fridays. And we want to make sure that they're paid on Fridays so they show up to work on Monday. Yep, right. Yep, and so it's this, healthy friction between the field. But also, as we're entering this information in, if you talk to a lot of accounting departments in construction, credit cards are a nightmare. People aren't using technology to capture receipts because they don't feel like, I don't want to have to pay for a service. And it's like, but you're not getting the information on the jobs. We're having to make payments out of the payment cycle on credit cards because we can't manage keeping the balances down because we're not getting the information timely. But having those communications and explaining why, because, my example would be if you don't give the receipts, we cut off the credit card. And then the project manager is going to say, but I have to be able to send them to Home Depot. And so, again, it's this balance back and forth between the two, operating functions.
Totally.
And so this is the thing that's so you started when I said, hey, how do you help them not lose money or help you save money? Maybe is the better way to say it. Yeah, there you go. Save money.
Not negative.
Yeah, there you go. And you talked about the estimating being off. So contractors come to you and say, hey, I thought I was going to make 20%. I made, 12% or whatever. And you dive in. How often are you able to actually figure out what went wrong? Because estimates happen at such a detailed level. There's 300 lines or something on an estimate with quantities and stuff like that. And then costs are tracked at a higher level typically. So are you often able to dive into the existing numbers and actually figure it out and say here are the main areas where you lost money? Or is it kind of it's hard to tell because of the quality of the tracking process, right? The receipts aren't being tracked, et cetera.
So it's interesting because one of the easiest ways to kind of flag whether or not a contract is losing money or there's an issue with some of the costs that are on the contract is doing a job schedule, looking at the over-under billings. And so typically if something is underbilled, the first question I'm going to ask is, why can't you bill the customer for this? And typically it's because there's more costs that have been incurred that you can't recover, right? So there's a harbored loss within the job. So let's delve in and we say, well, your material costs are, 20,000 for this particular material. And they'll say, well, that was only supposed to be 10. I'm like, well, it's double. Let's delve a little deeper. But there's flags that can typically tell you why, just by looking at it globally. There's going to be contracts that run according to plan, but if we can delve into and look at specifics, but the important part of this is having that job schedule up to date. If you're looking at a contract, if you're communicating with the project managers about these costs monthly at a minimum, that's what's going to give you the benefit to kind of understand this estimate aspect of it. And from construction accounting, that estimate really is the most important thing because it drives the amount of revenue that you can recognize. And a lot of times you'll find there's cost being incurred that aren't in my contract or my estimate because we have unapproved change orders. And so it's okay, well, what are we doing about getting the change orders approved? Because you can't bill for this until the change order is approved. And we don't, again, you're putting money out that you're not able to bill for, that it's going to take you longer to get back. And so all of these little things just kind of add up to kind of help benefit a construction company in the long run, I think.
Yeah, honestly, there's so many numbers, transactions, projects, vendors, customers flying around in construction. It is actually shocking to me that the industry still doesn't have great systems or great processes to track a lot of this. And it is, I mean, I guess maybe I'm talking my own book here, obviously, but it's crazy to me that like if I were a business owner overseeing all of this and I felt like all I cared about was that I have enough cash and I have a rough understanding of who I owe and how much I'm owed, but I don't really like know the details beyond that, I would be kind of paranoid,
Well,
I'd be kind of concerned.
And I want to put a little 1000%, but I also like the estimate for sure. But I mean, and yes, of course, could builders get better at estimating material and labor on the job and like how important is that? Sure. But you made a comment earlier, Dory, about is it indirect allocated overhead?
Mm-hmm.
And like, I feel like I hear a lot of builders that kind of pump their chest about the ability to estimate very accurately to the material and labor side. But then to your point of all the little things adding up and kind of sinking or at least like getting hidden in these estimates that don't get recognized, is that indirect allocated overhead, meaning like software costs, service fees, additional overhead that might not be getting allocated? Is that fair to say that that's where like a lot of the scorching happens?
No, it's the truck that the project manager is driving. Like, how are we putting the cost associated with buying the truck, insuring the truck, and putting fuel in the truck that the project manager has, right? Or it's a piece of equipment. And, a lot of times equipment operators do this or equipment heavy usage companies do this really well because they're charging their jobs, right? But now it's like, what are we making on that piece of equipment? Like, is the cost of maintaining this piece of equipment, like because it's in the repair shop constantly giving me problems and so forth, are we kind of acknowledging maybe it's time to turn this piece over and get a new one and so forth, or how we manage those types of things? But it is more of specific cost. Like, an example, a painter purchases paintbrushes, rollers, drop cloths, all of these things, but they're not necessarily buying those per job, right? Or there's like small equipment that they're utilizing that they're not saying this is for this job. And all of those costs add up at the end of the day, especially when things like paintbrushes can be disposable or lost and so forth. And so it's those types of costs that are really a cost of doing business or doing a contract that aren't tracked on the specific contracts. And there are a lot of softwares that handle this. They're saying like, if you have a project manager, we're going to burden his salary because he also has a truck. Or if we have a piece of equipment, we're putting that piece of equipment man hours on the job as well to make sure everything that goes into performing that contract is accounted for. And the big piece of that is, if you think about it, when you're competitively bidding and you want to knock 2 or 3% off, that 2 or 3%, if you're not factoring in indirect allocated overhead, could result in that you're not making money at all and you're actually paying for that customer to have that job done, right? So
yeah,
totally.
I guess that is so on the expected gross profit versus realized gross profit. So the expected gross profit being like when you estimate the job, realized it's done, right? How much of the drop, when there is a drop, do you think comes from like true kind of bad estimating? So you misestimated how many beams of lumber you needed, quantity here, price of the material, etc., versus costs start like picking up as the project happens and you're either forgetting to bill for those in a cost plus scenario because you just don't track them, or you have changes on the project that because you don't have a great cost control system in place, people are forgetting to log change orders, or at least maybe like log the full amount that they could log for the change order. Like, right? Like, so how much of the original estimate is bad versus just like the ongoing cost tracking as the project starts, do you think drives the decline in gross profit?
It really depends on the company. Like, I don't think that, there's just such a mixture of those things that play into every organization. And what's interesting is, I think my take on it is I'm always looking to say, what are the costs and are they getting to these jobs? And like kind of making sure that the reports that the production team is using tie into the financial statements. So there's just this reconciliation aspect of it. So I know that regardless of what scenario is, whether it's a bad estimate, whether it's cost overruns, whether it's, any of those things that you mentioned, like how are we accounting for it to communicate it and prevent it or improve in the future? The other thing that's interesting about construction accounting is where it really kind of, if you look at kind of how I earn revenue year over year on any specific contract, if I'm projected to make 25%, it's based upon the cost that I've incurred. And so the first, like, let's say 50% of the contract, I earn revenue at a 25% gross profit margin. By the time the contract ends and I fade, I have a catch up to some degree to kind of absorb a loss of where I've overtaken revenue. And those are the types of things that can impact any given year. When you have kind of look back and say, gosh, I faded. Well, that meant I took more revenue last year than I was entitled to, and I should have taken it this year. And those are usually smaller amounts per se, but they add up. And it's funny, the first place you can tell if somebody's having an issue with like their estimating is if you look at the oldest jobs on their job schedule. Typically they have fades or losses in the current year because they're taking the hit of what were over optimistic about in the prior year.
Yeah. Okay. Yeah. So this is starting to come, I guess, full circle with the beginning of the discussion where we talked about maybe two of the main problems you'll see business owners, kind of displaying would be one, they don't account for timing. We had talked about that earlier around like not having a longer term view when it comes to the financials, right? So timing being like not considering the cash flow impact of paying vendors before you get paid. Timing being not considering the impact of like, what's my 12-month pipeline of work and do I have the right kind of overhead in the office or not, right? Like timing being when do I recognize revenue? Am I recognizing too much of it in this year and I won't be able to recognize it next year? So there's like this timing element with the financials that I think generally people aren't paying attention to. And then the second is just the detail, which I think we could call job costing, is like actual good just process around detailed job costing, which then results in like confusion around, well, I estimated this and I ended up here and it's like hard to bridge the gap. I don't know what went wrong. And it's just because of a missing kind of job costing element. Would you say that's a fair summary of oftentimes?
Absolutely. And I also think from an estimating perspective, being able to truly line up what I estimated by this line item with the actual cost and connecting those is such a simple way to monitor that as well. And I think to your point, something that you had said, a lot of times costs are tracked at a much higher level, consolidated, and not kind of like, item for item. And I think that there's a huge benefit in that as well.
Yeah. Okay. Yeah. No, I mean, I think, I guess of the two, right? Like the timing considerations, the longer term views, you guys certainly help with this, right? At YHB, like you'll come in here, you'll start to get business owners in the mindset of forecasting and the mindset of managing cash and the mindset of like, the debt to equity ratios, the stuff that people probably aren't really talking about without your help. And then you said that the job costing will often live within the office, right? And you guys don't often how often are you taking that on versus leaving that within the office?
So essentially, like the transactional activity is typically a lot of times with the contractor. So invoices are coming in, they're putting them into the accounting system, they're putting into the system to make sure that they're being processed. That was something, I've worked both. I always say I've worked on both sides of the desk. Like I've been in a company working in their finance department, and I've also been, in public accounting. And so one of the things is like you can't take invoices out of the office. So it needs to go into the accounting system so it's not missed. It's not with someone other than where it needs to be. And it creates an electronic record that can then be disseminated to the field so people can see it and approve it and so forth. And so we want that real-time information, and that works best when it's in an organization. But then we're coming in at a higher level to talk about kind of like, okay, the data is there. Let's talk about what's in the system as far as like your costs, your, contracts, your backlog, those sorts of things to make sure that, we're, looking at it a little bit deeper and a little bit more often than once a year when we do year-end financial statements or tax returns.
But then how do you, so the issue you talked about with, hey, oftentimes they're just not tracking costs at the right level of detail. Like that's one example. Or, hey, they're not mapping indirect costs to the projects appropriately, right? or the job schedule, the job costing doesn't actually kind of cleanly map to the financial statements. These are all things that are tied into like which codes are selected, when someone in the office enters the invoice, right? Like ultimately at the end of the day, which codes are entered when someone enters the receipt, or which code is entered when someone enters the time activities. So if you're coming in trying to help at a higher level, but you need that detail to help at a higher level, how are you, is it like an upfront process where you're training the team on like, here's our new cost coding system, here's our new process to ensure that it's accurate after the fact, or are you not running into that as much?
So we typically start to meet them where they're at. What are you using? How are you doing your accounting? And how can we understand like the current system that you have? Here's another one-liner for you. I can drive a car, but I can't fly a plane. So we're also assessing like the people that they have in their office to say, what level are they at? What can they do? And then we look at tools that give us the ability to delve into the detail. And a lot of times we want the detail in there. And then I want to bring in the project managers, because I don't know if you needed to buy more pipe, but they should know because it's their job. And if we can drill into the detail, and then they say, oh no, this is, I don't know, wood or material. I don't know. The widgets always get me, but right. They're going to say, no, this shouldn't have gone to this cost code. It should have gone here. Oh, wait, this shouldn't have gone to this job. It may have gone to this, we're looking at it to kind of then have the project managers who should understand what's going into the jobs, be the person that's kind of helping us understand the details, because we're reporting it, but working with them. And it's the bridge of that activity. Again, it's not necessarily the paying of the bills. It's analyzing where it went, how much we're spending, and having conversations with the people that are actually out there, in the field doing the work.
Yeah. Okay. Yeah. All right. This is I think is the challenge, is like the fundamental challenge that I've we run into time and time again, is like there's a lot you could be doing at a higher level strategically, right? Better estimating, better forecasting of your business, better management of cash, so that you're not acting as a bank, all these things. But your ability to do that at a strategic level is dependent on your ability to track things accurately at like a tactical level. And I think often that kind of foundational tracking is not in place and well done. And so once you do that, kind of everything else will start to work itself out. So anyways, I don't know.
And it is like a process. Like we always go in, right? And a lot of times people are using something, like QuickBooks to kind of track this, and it really doesn't have the job cost reporting that they need as they grow. And so as we chip away at these processes and these procedures, and we start getting information back from the field to get reliable financial information, to your point, then we can flip it to say, now let's talk strategy. Yep. But a lot of times what happens is people dive right into growth mode and they drown because they have no idea, because they didn't improve the process along the way, and they get behind the 8 ball, and it can be very detrimental.
Yep.
Totally.
Just before Reese, before we wrap up the podcast, I just can't, you have some one-liners too. I feel like you gotta.
I was gonna say we have to end on something positive, because this hasn't sounded very good. But when we get it turned around, truly there's decisions that can be made at a higher level that benefit the companies.
Totally. This is everything's fixable.
Totally. Well, and I think, we don't need to just be, throwing around one-liners for the sake of one-liners. I mean, Dory, yours were massively applicable. I mean, there's a few more on the tactical end where I'm thinking just from the process and refining the process before you scale, just on the tactical stuff of understanding the cost, that field to office communication, to make sure that we are categorizing it, really boils down into one of my favorites, which is you can't plus what you don't cost. Mm-hmm. With a cost plus builder. And then the cost of the fixed price guys is it's a race to margin, right? You have to know your cost, but it's a race to margin, right? It always anchors around that cost standpoint. But I think ultimately, Dory, this entire conversation, I hope this resonates with the audience, because your perspective on it is so deep. But I think this was very tactical. More so on my end, I was more curious on the overhead side, and how do builders start to rationalize the CAS service, or do we have pilots, or do we have bus drivers in the office, for one of your examples. And like, how do they really get that confidence to say like, we need to reach out to Dory, we need to start looking at these investments, just as like a little send off here? Like, what would you applaud the listener or urge the listener to do to reach out to you guys?
So it's interesting. I think that a couple of weeks ago, I had to have some plumbing done in my house. And I called in one of my clients who came, and, they came in. I'm like, oh, this should be really easy, right? You just have to do X, Y, and Z. And they looked at me like I had 3 heads. And I'm like, oh, I finally get why, the owners look at me that way, right? Because I have a different perspective on like the accounting side versus maybe like the production side. And so I think that one of the things is to lean in to the accounting function and to the advisors that you have, because most of these business owners are very successful and they're very good at what they do. And like, I am not, like we were talking about like materials, I don't know what goes into like a production perspective, but I can account for it, right? So leverage what you know and, build like consultants or advisors around you to help you build the best business that you have, because a lot of times this is people's livelihoods. This is what they've invested everything in. And so it's like, I'm not a plumber, I call a plumber, and so it's the flip side of that. It's like, we're here to kind of help advise you and help you from the areas that you may not be an expert in.
That was perfect. And I think that's kind of like that dynamic that they run into. Right. It's like builders are classic. Like you'll hear examples of like remodelers even. They'll go into a house and they'll do a remodeler and they'll be like, oh, the last guy was terrible at their job. Like this stupid son of a, whatever, didn't do it this way. And like they're just going off on the past guy. But they're always like, they're the expert in it. But then it's so hard to get them across that finish line, to lean on the expert, to look at the technology for the things that they don't quite understand. I think it just always boils down to like an education and a thirst for education. And
that's interesting, because when the plumbers left, I'm like, I just can't wait to see, like, did they make money on this? Like, how many hours did they put into this? What was the cost? Because now it's like, it's, what I'm saying? It's not a job, right? Yeah. Exactly.
Oh, you don't have to do any cost tracking. You just have Dory stand on your job site. She'll count the hours. She'll count the money.
I was like, he's probably going to just go code your time somewhere else because I don't want her to see. Like,
yeah, exactly.
Yeah. No, I mean, I think Reese, I think this has been a great discussion. I think that if I was listening to this and I think we bucketed it into 2 things. If I felt like I didn't have great visibility into my costs, that's like a reason to call Dory. If I feel like I get great visibility into my costs, but these things that she was mentioning around debt to equity or like cash flow management or anything else like that are new and intriguing, that's another reason to reach out to Dory, right? So there's like maybe 2 levels to it.
One other piece on this is there someone too small? Or, and where I'm going with this is I think about this if I were a business owner and I'm looking at this and I know that I am the craftsman. I'm the one that loves the material, that loves the product, that loves the skill to go into it. But I also want to be proactive and insulate myself and build a strong foundation with these processes, knowing that it's probably going to be easier earlier than it will reactively later. Is there a threshold? Or is there a too early? Or is it truly like you get out, you go complete 2, 3, 4, 5 jobs, and then give Dory a call?
The best time to start is at the beginning. And most of the time people are always late when they decide to pull the trigger on something. And it is, if you're just starting and you set up a process to get you to, 10 times the volume that you're at the day that you start, you're golden. But half of the time you don't look at it until you're kind of over the hill and you're at this volume level. And now all of a sudden there's a lot to manage and to correct in that, process, so to me, it's never too late to get started, I guess. So
it's never too late to get started, and it's better to get started earlier.
Exactly.
There we go. Podcast title.
Maybe that's a one-liner. I don't know.
Cool.
Dory, this was great. I learned a ton. I feel like I have a CPA now.
Okay.
All right. Yeah, Dory, thanks for coming on. It was a pleasure.
Yes, thank you guys.